So simply, um, an uptrend is defined by higher highs and higher lows. So in order to take a long trade on an uptrend, you want to see basically this pattern. Yeah, right? So the price makes higher highs and higher lows. And we want to see at least two higher highs and two high lows to identify that it's on an uptrend. And obviously, when we're going to go long, when we're buying, we want to buy right here at the uh, correction point, and we want to get in before the next impulsive wave up. So this is known as the impulsive wave. The impulsive wave is the wave in the direction of the trend. So there's the impulsive wave, the corrective wave, impulsive wave, corrective wave, and it continues on. So we always want to identify impulse, correction, enter on the correction to write the rest of the channel. Okay, so once you identify that wave pattern, the next thing is to know what's the precise point to enter. So how would you know that this is really the low of this correction point? Well, you're looking for a reliable support level. So I look for a Fibonacci level, or I look for like a moving average level. And I also look for a candlestick pattern, like a engulfing pattern or a pin bar, to tell me that the price is reversing, and that's when I enter and I quickly take an exit over here. So for example, I'll risk what I call 1R. R represents my risk of my trade. Right? So for example, if I'm risking 10 pips, I want to make at least 20 pips. Right? So I'm going to risk 1R to make 2R. And essentially that's basically one of the main strategies that I trade every day, which I teach in my online professional courses. Now, conversely, if I want to go short, I'm looking for a downtrend wave pattern. So a downtrend is defined as lower highs and lower lows. So I'm looking for a pattern like that. Boom, 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 boom. That's right. Okay. So again, impulsive wave is the wave in the direction of the trend. So it's impulse, and then correction, and impulse going down, and correction going up. Right? So in this case, I'm going to go short. So I'm going to short at the start of the, or rather at the end of the correction. I'm going to go short over here, and I'm going to ride the next impulsive move down. Right? So I'm looking for again a series of lower highs and lower lows. So in order to identify a downtrend, I need to see two lower highs and two lower lows. Okay, so two lower highs, two lower lows. And I'm going to enter at this second lower high. I'm going to enter short at this second lower high. So again, how do I know that's a reliable level? Like how do I know it's not going to go higher? I mean, you can't be sure for certain, but I have a good indication of the top of the corrective wave by basically looking at again Fibonacci levels and moving averages. Look for a resistance level. And again, I'm looking for a candlestick pattern like a bearish engulfing or pin bar to know the exact point when the price is reversing, to short over there and to take a profit over there. So again, when I short, I'm going to place a stop loss somewhere up there. So my risk again is 1R, which represents my risk per trade in 10 pips, for example. And I'm going to take profit at, for example, 20 pips. So essentially, that's how I trade trends. Okay, so the important thing is to be able to identify these wave patterns, right? The higher highs and the higher lows. And that's where some people tend to struggle, all right? Because especially if you're new to the forex markets or any market, you may find it difficult to identify these patterns, right? Because of the choppiness, the intermediate noise in the markets. So you're going to be able to identify, for example, boom, 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 boom. There we go, right? So higher highs, there we go, higher lows, there we go, right? So again, two higher highs, two higher lows. So at this point of time, once you identify that it's a clear support level, right? So again, how do you know? It could be a Fibonacci level. So like for example, this is a Fibonacci level, right? If you use a Fibonacci tool over here, and you start from the start of the impulsive wave A to B. There we go. Right? So we got A, B, and C. This is exactly the 61.8% Fibonacci level, right? So for it to be a reliable support, for example, I want it to be a Fibonacci level at a 61.8%, 50%, or 38.2%. These are the three key Fibonacci levels that I know that is pretty decent support. Or again, I can use a moving average to determine the support level. So once I know there's a strong support, then again I'm looking for a candlestick pattern to tell me that the price is reversing up. So in this case, I've got this very strong bullish candle that looks to become like a bullish engulfing pattern, right? So that could be an entry to take a trade over there, right? And then your stop loss could be here, and you're targeting again 1R to make 2R. And you can see this is a pretty almost a perfect trade, right? Enter the exit somewhere there and get out, right? So this is just an example, of course, right? Now, for some people say, Adam, I find it hard to identify the wave patterns. One tool that you can actually use that's quite useful is called a zigzag tool. And I've actually, let me just put it there. Right, so that's a zigzag tool, by the way. So this zigzag tool that you see, it helps you to identify these patterns. Right, so it identifies higher highs. So in this case, it's higher highs and higher lows again. There you go. Right, so the higher highs, higher lows, waiting for pattern to take a trade. Okay. So let me give you some examples right now of how I'll identify these patterns. So what I'm going to do is I'm going to just zoom out, and I'm just going to scroll back some time in the past. Scroll back. Okay, so let me just zoom in, and I give an example of what we're looking for, right? Okay, so we're looking for, again, higher highs and higher lows for an uptrend. And again, I want to see that the moving averages are in sequence. The smaller moving average above the bigger moving averages, and ideally they are sloping up. For a downtrend, I'm looking for lower highs and lower lows with the moving averages in a downward sequence. Right? The bigger moving average is above the smaller moving average. Now you can see, for example, over here, where we stopped, yes, you can see higher highs and higher lows, right? But at this low point, there's no reliable support because it has broken the moving average and it does not look like a Fibonacci level. I can see from experience it's not a Fibonacci level. It takes experience, right? But again, if you're not that experienced, then you would have to use your Fibonacci tool to draw A to B, and you can see that it has broken below the 61.8% level, right? So from experience, I don't really need the tool. I can just tell that it's not a Fibonacci level. Right? Okay, so I'll just delete that. Okay, so I'm going to scroll and we're going to look for a pattern that we can trade. Okay, and again, you can see there's no pattern over here because it's lower highs and higher lows. So most of the time, the market is in a very random, choppy fashion, right? And we're waiting for that window of opportunity where the stars align in our favor, and that's when we take a trade. So sometimes I can look all day and not take any trade because nothing is in line. Certain days I could take 3 or 4 trades, so it really depends on the pattern appearing. So I'm going to show you the ideal pattern that I trade when I look for it. Again, I don't see it here.
Bedrock Deli. Discover a world of deliciousness.
Parker! 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 Park!
Regional roads aren't a game. Slow down and drive to the conditions.
Now over here you may say, hey, that's lower highs and lower lows. Isn't that a downtrend pattern? Yeah, but the moving averages are not in a downtrend sequence. You see the moving averages are jumbled up and the smaller moving average is above the high moving average. So there's what we call divergence, because the wave pattern's going down, the moving averages are going up. That's not a clear sequence. So we never trade where there's a divergence between price action and moving averages. I want to see a clear direction. Now over here, this could be a potential trade. I'm just looking at. You can see it makes lower highs and lower lows. There we go, right? And the moving averages are in sequence. And you can see that currently the price is finding the resistance at the moving average, and there is a bearish pin bar pattern. Alright, so that would be a potential trade. So I could place actually a sell order. Place a sell order somewhere at 2412, right? And I could put my stop loss somewhere up there at 24. Not too good at mathematics. 414. And I could put my stop loss at 2422. So I'm taking an 8 pip stop loss, right? So I'm going to put my profit target somewhere here, which is about 2 times my risk, thereabouts, roughly, right? So that's 1 to 2. Let's see if it hits my profit target, right? Okay, you can see that I got stopped out of this trade. So it did eventually go down, but it went up first, it hit my stop loss and it went down. So this is known as a losing trade, right? So you can follow the rules and get a losing trade, and that's trading. So I'm going to put a -1R here to indicate that my first trade was a loss. Okay, so that's fine. Oops. And let's move on to the next trade. Let's find one. That's not a Fibonacci. It's making lower highs and lower lows, but that's not a Fibonacci pattern, I can tell. Okay, so right now the moving averages are not aligned with the price action, so I'm going to align higher highs but lower lows. That's not okay, there we go. So there we go, higher highs and higher lows. Right, so we have got an uptrend wave pattern. We have the moving averages in sequence, right? The smaller moving average above the bigger moving average. And you can see over here, let me just run this again. We have a support at the moving average. So that's a level support. And this is like a bullish pin bar, right? So that's a bullish reversal pattern. So let's attempt this again. Oops. So I'm going to put a buy order right above the high of the candle, 2411, and my stop loss will be at the low of the candle there. Excuse me. 2398. So 2411 minus 2398. That's a 13 pip stop loss. Alright, so if I'm going for 1 to 2, I need a 26 pip 26 plus 2411 will be 2437. Alright, so in other words, I'm going to put a profit target at 2437, somewhere there. Alright, so that's my entry, my profit target, my stop loss. Let's see if we can reach the profit target, or will it give me another losing trade? Alright, so there we go. So hits the profit target, so that's a winning trade. So class 2, R, and again R is a measure of risk. Okay. So on to the next trade. And again, in trading, you don't have to be right 100% of the time, right? If you can just be right 50 to 60% of the time, and you're risking 1 to make 2, you're making great profits every time.
There's a place where locals help locals bring technology to life. To get the most from your tech, come in and chat to your local Telstra team.
Alright, so on to the next trade. Let's look for another pattern here. Okay, so again you can see higher highs and higher low, right? But I don't have a bullish candlestick pattern. I don't have like a pin bar or a bullish engulfing pattern. So, well, at least not yet. Let me just check. And down. And again, you see the moving averages are not in line with the price action, so you can't trade. But you have to wait for an alignment of everything. Okay, so let's click align. Okay, well, I see something over there. Hold on. Stop. Stop. I'm seeing stop myself. Okay, so we've got higher highs and we've got higher lows. There we go. So we've got that uptrend wave pattern, and moving averages are in sequence, right? The smallest moving average above the biggest moving average, and you can see that the moving averages are sloping up. So all the stars are getting aligned over here, right? And you can see that it is the current correction is finding support at the 50 moving average. And what is most important is I see a bullish engulfing pattern. That's called a bullish engulfing pattern. These are the things that you learn in the online professional forex course, the different kind of candlestick patterns that we look at, right? So once I see that pattern, I can say, okay, I'm going to put my buy order above the high of that candle. So I'm going to buy at 2439, okay? And put a stop loss at 2424. Okay. So 2439 minus 2424. My risk is 15 pips. Okay, so I'm taking a 15 pip risk. Alright, so my profit target is going to be 30 pips. So times 2 plus 2439. So 2469. Okay, so my profit target will be at 2469. There we go. Alright. Okay, so that's 2R, and that's within the previous high, so it should reach there if it's going to go up a bit. So let's see what happens. Fingers crossed. Yes, alright, great. So we hit our profit target over there. Boom. So that's another winning trade. You know. Now, usually when I trade, I don't really use these zigzag lines because from experience, I can see the price action. But I'm just demonstrating to you here that if you're a beginner and you find it hard to read these wave patterns, these zigzag indicators could be useful to help you to identify that. All right, let's just look for another trade. Let's just take one more trade and see if anything comes up. Now you can see that, oh, right, higher highs and higher lows, right? So could I put a buy there? That's not a Fibonacci level. That's the thing, right? So I can show you, from experience, it is not a Fibonacci level. So I'm not going to do that. So it's got to be a Fibonacci level, ideally a 38.2, 61.8, or 50% Fibonacci level. Right? So sure enough, see it broke down, right? Not a Fibonacci level. It's got to be a Fibonacci level. It's broken down. Lower highs, but higher lows. So no clear downtrend pattern. We got to see a clear downtrend pattern. Oops, I see something. Hold on. Hold the phone. All right. So I see lower highs and lower lows. And I see a bearish engulfing pattern. Now, question is that a Fibonacci level? Let's take a look. I can confidently tell it is probably a Fibonacci level. I just need to confirm that A to B. Yes, it is a 38.2% Fibonacci level. Alright, okay, so looks like a reasonable resistance at the Fibonacci, so I'm going to place a sell order here, for example. I'm just going to sell right at the low of that candle, say at 2378. And I'm going to place a stop loss right above that at 2389, right? So 2389 minus 2378, that's an 11 pip stop loss. Okay, so my risk is 11 pips and my profit target should be 22. So 2378 minus 22 is 2356. Okay, so my target would be 2356, somewhere below. So let's see if it reaches 2356. I'm not sure. Ready? Let's see what happens. Yes, it goes to 2359. Let's see, will it hit 2356? Yes, just. Wow. That was close 235. In fact, the low was 2355. Yeah, so just hit the profit target. There. Went up and went down again, so would have definitely hit the profit target again. Alright, so great. So that's another winning trade of 2R. Alright, so to just give you an example again, you don't get winning trade off all the time, but if you can get 60% or even 50, 60, 70% winning rate and you're risking 1 to make 2, that's a pretty good profit strategy that you have, right? So these are just one of the many strategies that I trade every single day with my students. We trade together, and it's one of the strategies that I teach on the online professional trading courses, which I have at piranhaprofits.com. So do check it out, and I hope you enjoyed this video. Alright, so if you like this video, you can subscribe for more videos by clicking on the subscribe button. If you'd like to enroll in our professional forex trading courses, you can go to piranhaprofits.com. For live training courses in Asia, do visit us at wealthacademyglobal.com. This is Adam Khoo, and may the market be with you. Alright, so I'm spotting a potential bounce, short setup on Euro New Zealand dollar. It's the 50-minute candles. So let me just pull out my drawing tool in a sec. Okay, so I'm spotting a potential short setup, bounce, short setup on Euro New Zealand dollar, 50-minute candles. You can see it's been testing the 50 moving average, and right now it's right there at the 50 moving average. Right, in fact, here the 50 moving average looks like it's coming down, and I should actually have sold it when it was there, but I was doing something else. I was busy with my kids, so happened. So now that I've seen it's really kind of like coming down, so I could buy anywhere around this area. That'll be fine. Okay, so this is a recent swing high. It's lower than the previous swing high. Okay, and the recent swing low is lower than the previous swing low. So it meets all the necessary criteria. And we're going to check the H1 candles, hourly candles. Well, before that, notice that on the 50-minute candles, it's on a clear downtrend, right, where the 18 is below the 50, below the 200 moving average. You see over there. If I click on the hourly candles, you can see it's also on a very clear downtrend. 18 below 50, below 200. So H1 is aligned with 50-minute candles. Okay, so I'm probably going to put a sell order right at the 50 moving average. You can see it's moving up slightly again, so I can have a chance to get in at a slightly higher price, which is what I want. So I could sell at, say, 663, well, hoping to sell at 6636. Okay, and my profit target has to be before this swing low. So my profit target will be somewhere here, roughly, right? Don't be too greedy to put it there. And so how many pips can I get? I can capture from here to here about 35 pips. So I can put my I can afford to put my stop loss 15 pips above this moving average, because if I'm risking 15 pips, I can make 35 pips. It's still more than 1:2. It's still a pretty good deal. Okay, so let me do my math. 6636 plus 15. Let's go to that. 6636 plus 15. Stop loss should be at 6651. Roughly at 6651. And you can see it's coming down, which is not too good for me, because I wanted to have sold it there, and hopefully it's going to go up again and fill my order, right? Okay, so no worries. Again, my stop loss distance is about 15 pips away. This is the Euro New Zealand dollar. So just do your position sizing appropriately. So I'm going to trade 0.98 lots on this one. So I'm going to click new order. 0.98 lots. I'm hoping it's going to come up and fill my order. I'm going to do a pending order, sell limit. I'm going to sell it at 6636. 1.6636. Stop loss 6651. I'm just going to place the order first, and then I'll place my profit target. There we go. Okay. So I've got an order to sell at the green line. Right now the price is here. Again, I should have sold it when I was there, but I was doing something else. It happens in trading. By the time you look at it, it's already gone down, right? I should have sold it there. So when that happens, no worries. We put a sell limit order there, hoping the price would go back a bit and fill my order at that level, because I don't want to sell it here. I don't want to chase it down, because if I sell it there, I'm not getting a good price, right? So my stop loss is there, 15 pips away, and my profit target can be 30 pips below my entry price. Looks like it's coming down. I may not get filled. Let's hope I may get filled. Okay. So my profit target will be 30 pips below my entry price, which is 1.66 1.6606. There we go. Right, so my entry price over there, stop loss over there, profit targets over here. You can see that if I had gone in when I should have over there, I'll already now be in a profitable trade, waiting for the profit target to hit. But again, sometimes you miss a trade because you're busy. By the time you look at it, it's already gone down. But if you just don't hit your profit target yet, you can still place a sell limit order, hoping it will go back up temporarily to fill your order before going and hit the profit target. Because remember that in Forex, nothing moves in a straight line, right? It doesn't always go down immediately. It could go down, go up, it could fluctuate. So I'm hoping it's going to fluctuate slightly up to fill my order before going down. Well, let's see what happens. It may not get filled. If it hits the profit target without me getting filled, that means I've missed this trade. I'll cancel the order. I'll look for the next order. All right. So this happens in trading. To tell you that sometimes you may get in late, but if I had seen it gone up, all right, I could have placed a sell limit order there to catch it going down. Alright, so let's see what happens to this trade. Alright, so I'm still waiting for the price to go up. Okay, you can see that it's now going to hit the profit target. So now, let me take this opportunity to teach some lessons here. And one of the lessons is, some traders will say, Adam, if I'm so convinced it's going to go down, I want to just sell it right away, right? And one of the things I've learned is, don't ever chase the Forex price, right? So if it has already moved down, don't chase it, don't chase it, right? At the same time, if you're going long and it's already gone up without you, don't chase it. Let it come down to your intended price. If it doesn't, fair enough, walk away, find another trade. Don't be afraid of missing out on this trade. If you can't get your price, don't go in, right? So even if you don't get this fill, I like to take this opportunity to teach you this lesson. Okay, that if I miss this trade, it turned out to be a winning trade, I missed it, that's fine. That's part of trading. No regrets. Okay. You can't always be there at the exact time unless you are watching the market 24, 7 days a week, and you're gonna have a life sometimes, right? So at times you miss a trade, at times you get a trade. So it's okay, While I'm looking at it, let me just check on the Fibonacci. I'm going to click Fibonacci ratios. So notice that this is an impulse wave, so it's impulse wave going down. So if you were to draw Fibonacci, let's check it out. This would be A, that would be B, right? B. And is this a Fibonacci level? Because I was rushing, I didn't check. But if I, had the time, I would check, right? So let's check it out. A to B. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82, 83, 84, 85, 86, 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, 100, 101, 102, 103, 104, 105, 106, 107, 108, 109, 110, 111, 112, 113, 114, 115, 116, 117, 118, 119, 120, can see it's not really at the Fibonacci level, right? Because the Fib level was here. Okay, well, it is in a way. So it kind of like hit this Fibonacci 61.8% level, right? And found resistance, and it looks like it's coming down from there. Okay, so it is near a Fibonacci level, not exact, but it's near that. Okay, so it's a pretty good retracement. Okay. So again, I'm still waiting for the order to be filled. I'm going to come back in a while. I'm going to do something, and let's see if it gets filled. If not, again, we've learned an important lesson from this trade. If you've missed the trade, place a sell limit order. If it doesn't get filled, hits the profit target, cancel the order. Don't chase the trade. Move on to the next trade. All right, so checking in on our trade, and some good news, as you can see, the price actually went back up as we anticipated, and it triggered our sell order. All right, so let's take a look at the order view terminal. All right, so as you can see, we sold Euro New Zealand at 1.6636. That was our entry price. Our stop loss is there, target price is there, and right now our current profit is there. Okay, so as it goes down to our profit target, we will hit our maximum profit. If it goes to hit our stop loss, we will of course have a negative return. But it looks like it's going to hit our profit target soon. We are halfway there. Looks like a high chance another winning trade for the bounce setup. So again, lesson learned is when you saw it coming down just now, you may have thought, okay, the game's over, I was too late, forget this trade. You know what? You never know. You can still place your sell order up there, and in Forex, it always tends to be a bit volatile, so it doesn't go down a straight line. It may go up again to fill you at a better price before going down to hit the profit target. And again, the lesson is, if it's gone down, don't chase it, because imagine if you had sold there and it went up there, you say, you know what, I got in at that price. Okay, so if you're going long and the price has really moved up, don't chase it. Place a buy limit order, let it come down to buy the lower price before going high, right? So you gotta have faith in the strategy that it will work, not all the time, but over time it will indeed produce the results that you want. So this Euro New Zealand franc short bounce trade. Okay, so happy to report that it has hit my profit target, as you can see. So once it's hit the profit target, you can see all the lines are gone. I'm going to go to view terminal, and as you can see, let me go to my account history. So there we go. We have exited with a maximum profit of $213. It hit our target price, so it's in green over there. Okay. And you can see, by the way, these are the recent trades I've done for this particular month. It's the 10th of January, so I've had 10 days of trading in January. And you can see not all trades are winning trades, right? This is a winning trade, losing trade, this is a break even, winning trade, right? Winning trade, losing trade, winning trade, losing, okay, winning trade, right? So overall, I'm up $876, okay, and this is a small account which I'm using to show people that you don't have to start with $1 million or $500,000, but I just started this account. Let me just show you. Right now the equity is about $6,000, and I started in January with about $5,200, right? So from $5,200 to $6,200, well, sorry, I was at 5,003, yeah, from 5,300 to 6,200 in just 10 days, right? In just 10 days of January. $800 profit, and if you think about it, $800 profit, let me just do the math right now. trading days was just about 7 trading days, right? You can do 15% in 7 days and keep it up to do about 20-30% return in a month, right? And again, not every month would you get 30%. Some months you can get 50% return, some months maybe 5% return, but my goal is always to end every month positive, right? And that generates, good income as a professional trader, right? Okay, so that concludes Euro New Zealand short bounce setup. Alright, so if you like this video, now of course it depends on your strategy. Now I tend to trade the 15-minute time frame, so I set them all to 15 minutes. And my primary strategy is the bull flag. I'm trading what I call the bull flag, surfing off the moving averages, and set a bull flag. So again, I'm standardizing everything to 15-minute candles using my bull flag setup. Right? So I have put in all my dollar pairs: dollar CAD, dollar franc, dollar yen, Aussie dollar, euro dollar, New Zealand dollar, and pound dollar. So once I put in all the dollar pairs, what I do is I just click on this profile and I just click save profile. Right? I'm going to save it as dollar pairs. Click OK. So once you click OK, you will have all your dollar pairs over here. So next time you want it, just click on dollar pairs, boom, it comes up with all your dollar pairs. Okay. Similarly, so what you want to do, you want to create Aussie dollar pairs, Canadian pairs, franc pairs, euro pairs, pound pairs, yen pairs, New Zealand pairs, and dollar pairs. Right? So I've got 8 different profiles. Okay. So this is when I trade my usual strategies. Like I trade a bull flag, I trade the trend continuation, entry pattern. Now, when I scalp the news, I've got a special one called scalping the news. So for this one, basically it's just 2 charts. And I'm scalping using the 1 minute and the 5-minute candle. And again, depending on which currency I'm trading, could be again the Canadian or the pound or the yen. Okay. So what is the reason why I organize my MT4 according to these pairs? Right, for a few reasons. Number one reason is it helps me in scanning the market. Right, so every morning when I wake up, the first thing I do is I look at Forex Factory to check are there any major news that's coming up during the day. So if there's a major news coming up, I'll avoid trading my normal strategy during that news event. For the news event, I'll trade my scalping news strategy. Okay. Then what I do is, once I know the major news for the day, I'll then look at all the different pairs to see, is there a trade setup? So first thing is, again, I'm looking at my Aussie pairs, click on Aussie pairs, and then I look one by one. First one, is there a trade setup? Okay. Is there a trade setup? Okay. So that's how I scan the entire market. Right? I look at all the pairs, and once I see there are some potential setups, I then put it into my watch list. So I create one just called watch list, and my watch list basically will have the charts where it looks like a trade setup is coming. So these are the ones I look at on this particular day, and every time there's a potential trade setup, I put it into my trade setup watch list. So that's one reason why I organize it this way. The other reason why I organize it this way is because when I'm trading, I like to look at correlation between pairs. And okay, so what do I mean? Right? So for example, if I see a trade setup on, for example, so say for example, I find a setup on Canadian yen. I said, okay, I want to short Canadian yen because it looks like, for example, it looks like it is trending downward. Okay, for example, all right. So I want to short Canadian yen. So if I'm going to go short on Canadian yen, what does it mean? It means that I am bearish on the Canadian pair. Right? I think the Canadian will go down, and at the same time, and going up, right? So again, when I'm shorting Canadian yen, that means I'm short the Canadian dollar and I'm long the yen dollar. Okay. So before I take this trade, what do I want to see? Ideally, when I look at all the other Canadian pairs, I want to see them moving together, right? So I like to see all the Canadian pairs showing that the Canadian currency is going down. Or I look at all the yen pairs, and I would like to see that all the yen pairs are showing strength in the yen. Does this make sense? So in other words, when I see all the Canadian pairs moving together or all the yen pairs moving together, it gives me more confidence that this will be going down, right? Because all the Canadian currency pairs are going down, right? All the yen pairs are going up. Make sense, right? So based on this, first I'll look at all the Canadian pairs. Oh, since I'm here, I'm going to look at all the yen pairs, right? So I like to see that most of the yen pairs are showing strength in the yen. Okay, so do I see that? Let me take a look. So first I look at dollar yen. Dollar yen, if the yen is strong, that means the dollar yen should be going down, right? So again, you can see that it is a bit on a downtrend, so that's okay. Canadian yen should also be going down. Yes, it's going down, that's what I want. Euro yen, is it going down as well? Yes, it's on a downtrend pattern. Right, as we see, downtrend pattern. Franc yen, yes, it's also on a downtrend pattern. Right? Aussie yen, yes, also on a downtrend pattern. Right? So, or you can, if you want, you can click on this tile and at one glance, you can actually look at all of them together. Right? And again, you want to see that ideally, all the charts look like they're moving together, which is going down. All the ones with yen, right? So franc yen, Canadian yen, pound yen, all going down, for example. Right? Okay. Or alternatively, I can look at all the Canadian pairs. So I'm going to click on Canadian pairs. And again, remember I'm short Canadian. So I want to see all the Canadian pairs showing me that the Canadian currency is weak. So if we look at Canadian franc, you can see Canadian franc is, yeah, it's not weak. You can see Canadian franc looks like it's going up right now. So how about dollar CAD, right? So if Canada is going down, dollar CAD should be going up. Yes, it's going up, so on an uptrend. Right. Pound CAD should also be going up. Yes, pound CAD is going up. Aussie CAD should be going up. Well, it's going sideways, right? Euro CAD should be going up. Going sideways, right? So you can see that the Canadian pairs are not all in line, but the yen pairs are all in line. In other words, you can see that yen is strong across all pairs, right? As long as one of them shows correlation, I'll take this trade. Does that make sense? So let me show you another example on a trade which I just did recently on Aussie yen, and I took it because all the yen pairs were in line and the Aussie pairs seemed in line as well. Alright, so you can see the trade on Aussie yen, and this is a TCE trade, or I call it a trend continuation entry trade. Again, you can see that we have got this pattern over here, right? Price makes lower high, okay, and lower low. So now going towards the profit target over here, there's the entry, stop loss, and profit target. So again, before I took this trade, I wanted to make sure that when I looked at all the other Aussie pairs, okay, so this Aussie yen, so I'm going short on Aussie yen. So when I short Aussie yen, what does it do? That means to say I am bearish on the Aussie dollar, right? I believe the Aussie dollar is going down, and at the same time I'm long on the Japanese yen. Okay, so when I look at other Aussie pairs, I ideally want to see other Aussie pairs going down as well, or I want to see the yen pairs going up. Alright, does it make sense? So over here you can see that when I'm looking at the Aussie yen pair, I also like to look at all the other yen pairs. So dollar yen, CAD yen, euro yen, franc yen, pound yen, right? So again, I'm short Aussie, which means I'm long yen, right? So like you see the other yen pairs showing yen strong as well, right? So if you look at pound yen, so you can see it's also going down, right? Which means yen is going up. That's why pound yen is going down. New Zealand yen is also going down, right? So you can see that there's a correlation between Aussie yen, pound yen, and New Zealand yen. And if you look at franc yen is also going down, right? So it's going down. So that gives me more confidence to take Aussie yen trade because it shows you that all the other yen pairs are showing strength in the yen, right? Euro yen is also going down as you can see. Now at the same time, you could also look at the Aussie pairs, right? Aussie pairs. And if I'm short Aussie yen, again it means I'm bearish on Aussie, right? So I can see all the Aussie pairs going down, right? So you can see Aussie is again downtrend, Aussie's on a downtrend, Aussie's on a downtrend, Aussie's on a downtrend as well. So again, this is my Aussie yen trade. Alright. So that's how I look for correlation between pairs before taking a trade. Okay, so following up on the trade that I just took a couple of minutes ago, you can see that right now it is moving towards my profit target. So I'm going to take profit in a short while. Hopefully, can get there really quickly. And again, you can see that for the other pairs, the same thing is happening, right? The price has gone down for Aussie CAD, Aussie franc, Aussie franc sideways, Aussie dollar is going down as well, right? Aussie dollar, Aussie yen, which is the trade I'm taking, Aussie New Zealand, right, went down, and so you can see how correlation works, right? So when one goes down, they all tend to go down. So we like to trade pairs again with really great correlation. Like this video, do click the subscribe button for more videos. If you'd like to find out about online professional forex and stock trading courses, do visit piranhaprofits.com for international students, and for students in Asia, we have our live stock trading and investing courses at wealthacademyglobal.com. This is Adam Khoo signing off. May the markets be with you. Alright, so let's take a look at specific emotions that's going to affect you as a trader. The first one is greed, and greed is a big one because most of us go into the markets because we want to make money, right? So we have a certain level of greed, but you can't let the greed overcome you, right? It's kind of like what Jim Cramer says on BBC and NBC. He says, bulls make money, bears make money, but pigs get slaughtered, right? So if you're a pig and you're greedy, eventually you're gonna end up blowing your account. So greed may cause you to raise profit targets too high and to stay in the trade too long. This can cause future winning trades to become losing trades. So here's a typical example. So say you went long over here and you had a profit target of 1.5 R. As you've learned in most of my lessons, that is my usual profit target for Forex 15-minute candles. And the moment you enter one, when the price spikes up, hits your profit target, you get 1.5 R, which could be whatever, right? $500 or $1 grand or $5 grand, or whatever money you made, and you feel, wow, great, made money, right? But guess what? The moment it hit your profit target, the price continued going up, going up, going up, going up. I say, shit! If I stayed in the trade, I would have made, instead of 500, 5 grand, or 2 grand, or 4 grand. So why did I take profit of 1.5 R? You know, what's the deal, right? And guess what happens, right? And you start to have this thing called regret, right? You buy there, hits your profit target, goes up, and you have regret. You know, I should not have sold too early, should have stayed in the trade. So the next time, you know what, I'm not going to have a profit target, no profit target, or I'm going to put my profit at 2 R or 4 R. And oftentimes I get emails and people ask me, Adam, why do you put a profit target at 1.5 R? Why not 2 R, why not 3 R? Why do you put a trading stop loss? Hey, you think I'm stupid? You think I don't want to make more money? Alright, I've been trading for 26 years. Don't you think I would have thought about it? Duh. Okay. Sure, when you see the price running, you think I could have been there. But I can tell you it doesn't happen all the time. Right? When you enter a trade, you don't capture a great trend all the time. In fact, that is the exception rather than the norm. Most of the time, after you enter hits your profit target, it goes sideways or goes down or whatever can happen. So you cannot take one event and generalize it. And the danger by doing that is that if you put your profit target too high, like for example, in this case, you say, okay, I'm going to put my profit target at 4R. No 1.5 for me, I'm going to put 4, 3R, the trailing stop. That's what's going to happen. True enough, the next trade is going to go up. It's going to hit maybe 1.5R, right? And then, right, goes down, doesn't even lose the trade. Or break even, for example. And instead of getting your 1.5R, you got 0, you got -1. And trust me, that happens, right? So, stick to your profit targets. Now, I'm not saying that you have to put 1.5R. It depends on your strategy, right? So, in other strategies I use, I may put a 2R target. Or, for example, when I trade stocks, in certain cases, I may even have a 4R target. It depends on the strategy. So, what I'm saying is this particular strategy which I use in Forex, which is the impulse pullback, impulse pin bar with 50-minute candles, I found 1.5R is the optimum for this strategy. Okay, but I'm not saying that it must always be 1.5R. Okay, just bear that in mind, right? So again, you can see in this case, the win becomes a loss because too high a profit target, or you didn't get out. Okay, good. Next one is fear. All right, so